Hey folks, Dan Frio here with your closing bell for October 2nd, 2024. So here's where mortgage rates went. They went up. I told you they were going up this morning, but we just finished about an hour and a half live video on YouTube, and we discussed all kind of questions from people. And one of the biggest questions that was asked was, Dan, what's going to happen to rates after the election? And that was a complex question because I'm like, I don't know. I keep trying to dig into each person's policies and things like that. So I do want to show you a clip here in a bit from CNBC. They just interviewed two men on the channel, and they had a big take on last night's vice president debate, and then also they're going to give their point of view on the port strikes and just the mess that's everywhere. So we'll get to that in 1 second. Let's just go over. Here's what's baffling me. Okay, so we have a strike on the east ports, or the ports throughout the whole East Coast. You got that going on. Yesterday you had Israel getting bombed. You have the Russian-Ukraine war still going on. You have people decimated with the hurricane. How in the world are the equity markets up? It just doesn't make sense. Okay, so that's the disconnect that I'm trying to put together to help you guys out and navigate this environment. So that's what we're seeing right now. The equity markets, they're all up. I don't know what cryptocurrency is doing. It's down $1,000. Oil's probably up a little bit on the Middle East concerns. Let's go to Yahoo Finance, see what they're saying. Here's stock steady as Mideast caution grips markets. So I can't figure this part out. So I went to this, and I go through a lot of videos and CNBC and financial channels and blogs and everything else. This thing encapsulated everything kind of in one little video. So I know I post a lot of videos. I watched probably hundreds of them, and I post the ones I think will provide you the most informative information. And the reason why I do this is you can hear me talk, but I want you to get the word from analysts. And I don't care if they're on CNBC, Yahoo Finance, Bloomberg, whatever. Somebody, in the know better than me, just a guy in his office doing mortgage reports, people maybe on Wall Street or world leaders. That's why I do this, to give you more context, not just me coming in saying, hey, the market's good or the market's bad. So let's get their take on how the presidential or vice presidential debate went yesterday, and then they fill in a whole bunch of other blanks to help us understand a little bit more what might happen after the election. So let's get to the interview.
Right now, let's get to last night's vice presidential debate between J.D. Vance and Tim Walz. We are joined this morning by former SEC Chairman Jay Clayton. He's now Apollo's non-executive chair and a CNBC contributor. Also, Gary Cohn, who is former NEC director. He's now IBM vice chair as well. And gentlemen, thank you both for being here this morning. Why don't we just start with what we learned last night? What'd you take away from it?
Here was my takeaway, that I've said it before. The American people are smart. And these candidates responded to the American people asking for substance. We had substance last night on the economy. We had substance on border, and we had substance on conflict in the Middle East and Ukraine. Yeah. And that's because the campaigns responded to the American people saying, give us something, instead of calling each other names.
And by the way, civility, I think, too. It was the other thing that came away from this.
I was very impressed by the substance, and I was particularly impressed by JD's substance, not just isolated on those issues, but across those issues, how they all tie together. The American people know that a strong economy, strong national defense, and immigration, migration, where we're going forward, they all tie together. And I thought he did a particularly good job of being consistent across those issues.
Gary, what did you think on the economy, the issues that came out there?
So I think on the economy, again, I'm not sure we learned a lot. I don't think any new policy was put out. In fact, the only new policy that's been put out since we were here last is the Harris-Walz team did put out their 82-page economic platform, which is quite interesting, and maybe we should spend some time talking about that.
Well, let's do it.
But what we've learned, and I think what they continue to do, is they continue to reiterate that what you've seen in the past is what you're going to get in the future. So what you saw from the Trump administration during their 4 years, their policy of lower taxes, very accommodative from the regulatory standpoint, trying to grow the economy, they continue to reiterate that. From the Harris-Walz team, they put out 82 pages of new and bigger entitlements. Like, I could go through the list, but I'm not sure we have enough time. We're going to talk about new housing credits, small business credits, forgiveness of student loans, higher inflation, enhanced child credits, preschool credits, long-term care credits, paid family leave credits, government control of health care, price controls. I can keep going.
No,
the list keeps going
you're
on.
right. I think you're absolutely.
So I didn't pick this video because of that. You kind of know where I stand on things. But Becky, she comes in and she does the counterpoint of this. But that's what I keep telling you guys. This is what's causing rates to stay elevated. Why rates went up since the Federal Reserve cut rates. We have way too much giveaways. And finally, I think hopefully our citizens are realizing, hey folks, please take care of us first. We're paying all these taxes. You keep raising these taxes. We have almost a $2 trillion deficit for just the year, but you keep giving all this stuff away, especially to all these other countries. I don't get it. So I think the country is maybe starting to realize, let's take care of our own. But Becky's going to counter on this, so let's see how she counters.
Absolutely right that there's a big change, but I would say it's the same from both campaigns. Because I would say former President Trump has laid out a pretty long litany of things on the campaign trail that he would spend on. And we're not looking at a whole lot of ways to raise it outside of tariffs. So I think you're right. I think both of these campaigns are talking about pretty aggressive shifts from what we've seen in the past.
No, I think this is exactly what Bidenomics is. I think the Harris-Walz team laid out in 82 pages Bidenomics. So now we can call it Harrisonomics. And I think what you've seen from the Trump-Vance team is you've seen a reiteration of what they did in the past. They continue to talk about lowering taxes. They do continue to talk about tariffs. We've talked about tariffs where they're effective and where they're not effective. They continue to talk about growing the economy. Growing the economy so we have a higher GDP so everyone gets raised up, so we can grow wages, we can grow the entire size. And I think that's the difference. One is grow the economy so all boats rise. The other is redistribution of the economy.
The two things that really strike me now, though, is we are faced with massive news issues that we've been talking about all morning. One would be what's happening in the Middle East. The second would be the strike with the longshoremen. And maybe we should start with the easier one first, being the longshoremen.
So we were talking, Jay Powell, I think everybody's giving him high marks for where we are in trying to land this. What's not in the textbooks? A port strike. What's not in the textbooks? Increased conflict in the Middle East.
This is what I've been saying daily. It's like you can go out there and give a forecast or a prediction, but things can change like that. And that's why I'm not on the wagon where, okay, house prices are going to keep going up and up and up. I'm not on the bandwagon they're going to crash. I'm not on the bandwagon that mortgage rates are going to go down to 4%. I think we're just going to have a flat economy. And I'm still amazed that our financial systems are still as up as they are right now on this. But we'll continue with his, but they list out conflict after conflict after conflict. But it seems like the equity markets and the bond markets are they're stable. And usually, if you had, again, and I keep beating this horse, if you had war, Israel getting bombed and the hurricane and other things, these numbers should be much different. The Dow Jones should be way down. It should be way down. Bond markets should be taking in all this extra money for people moving to safe havens, driving down yields, and you're not seeing any of that taking place. And that's why I'm going out there doing the research to help you answer the questions for you guys when you ask me what's going to go on with rates. So he lists a laundry list of things, and we'll get back to him.
Energy price shock, if that comes or not. These things are not there, and both of them are inflationary.
Yeah.
And so what do you do if you're at the Fed? You've done very well here. You've kind of brought demand down. We're going to headed towards soft landing, and all of a sudden you have these two inflationary forces hitting you in the face. The Fed has a tougher job today than they did a week ago.
Agree.
And what happens? I mean, Gary, just looking at it from the economic perspective, we've been talking about how 0.3% cut off GDP if this lasts a week, and every week thereafter.
No, look, as Jay said, we've been talking about this a lot. This is a much tougher scenario, and we haven't thrown the Middle East in there. We haven't thrown a major oil shock. We haven't thrown in there closing the Suez Canal and making shipping routes completely different, and we know the difference in shipping costs going around Africa than through the Mediterranean. These things are highly inflationary. This will be the real definition of transitory inflation. We'll get back to where we thought we were 4 years ago of transitory inflation, a port strike, real disruption in the Middle East and shipping lanes and oil. This is all will have real short-term impact on the U.S. economy. And I think Chair Powell sort of started foreshadowing that last week, where he started talking about, a slower, more methodical move. I think he was foreshadowing exactly what he thought may be in the cards with the port strike. Look, we got the 50 basis points, which we always thought was 25 at Jackson Hole and 25 at the meeting. That was the 50. Then we thought there'd be 25 more in the next two meetings. Look, I think there still is probably 25 more in the next two meetings, but it's not is positive. I'm not as positive today as I was last time I sat there because of the port strike and because of what's going on in the Middle East. These things can amplify very, very quickly.
I want to.
Okay, so we'll leave it at that because I know that the video is getting kind of lengthy. But he was saying just all those entitlements they keep adding to this. So what do they do if they have a deficit? They're going to have to continue to issue more Treasury bills, bonds. That's going to drive yields up even higher. So it's kind of a mess out there, folks, right now. But just stay tough, stay positive, watch daily. Like he said, it's going to be transitory. So once the ports open back up, they'll probably catch up pretty quick, and hopefully they nip this in the bud pretty darn quick. President Biden does have the ability to jump in and halt the this, but I don't know enough about that information to provide details on that. So I don't want to take a guess, but I figured if it was a good thing for him to go in and do this, there is some presidential act that he can do to cause the port strike to end. But I'll research that more and get back to you on that one. So some good news for you guys out there. If you've bought that house and you're looking to refinance, we finally came up with our rate watch. Here it is. So I'll be posting this. It's down in the description below. We finally found the name. It's called Rate Watch. I'll be adding this to our website as well. So if you've already bought your house and you're waiting for that opportunity to refinance, we made the tool available for you. So we're actually allowing you to put in the rate that you want when you refinance. Yeah, the rate you want. And we'll contact you as soon as that rate hits that number. We'll be on the horn with you. We'll call you, text you, email you. We'll get a hold of you to make sure you're aware of that rate just hit. We'll go over the financial numbers with you, the cost, the payments, the savings, and everything else, and get you on your way. So if you want to find out more about me and my team, visit us at therateupdate.com. My name is Dan Frio. I'm a mortgage loan officer licensed in all 50 states, as well as Puerto Rico, and I'd love to help you if you're out there trying to find that mortgage that just fits your needs. So if you're looking to buy that first house, I just surprised a young lady. She didn't do the grant finder, and I just surprised her with a pre-approval and $5,000 in down payment assistance money. So if you're out there trying to find that first house, check out the grant finder. Otherwise, you're more than welcome to hit the apply now button, or you can call us. And by calling us, you're going to go right down through here, and our 800 number is right there. It's 844-775-5626. Or my email is dan@therateupdate.com. So thanks so much for watching, guys. God bless. Be safe this evening. It's a tough world out there. And I'll see you back here first thing in the morning. Have a great evening, folks. Bye-bye.